In terms of chart patterns, one of the more common ones you'll see out there are triangles. And really what's happening with there is there's a converging of a support and resistance levels. So think of, again, I think of support levels as prices don't go below a support level. They're bouncing off the bottom. There's a level where they're not breaking through or going lower. And a resistance level would be at the high part of prices, where prices maybe are marching up to a resistance point, but they don't break through that resistance. They kind of turn around and start coming back down. And they're trading between these support and resistance level. But with a triangle, these things are starting to come closer together. They're converging is what's happening. And they could be either in a rising or declining prices. The trend could be either going upward or downward. And so what's happening is the trading price range is starting to converge or narrow. Maybe it started out here and then it started to get narrower here, and it actually forms the shape of a triangle, as you'll see in the upcoming lessons here. And then what happens is the breakout, when it breaks through one of those lines, either a support level or a resistance level, when it actually breaks through those and then starts going further in either direction, whichever way it's going to go, it usually will break in the direction of the original trend with a triangle. That's very important. It'll break in the original direction of a trend with a triangle. So if the original direction, let's say upwards, and the triangle forms and starts to converge, then if it's an upward trend, it'll break through that resistance level at the top and then break through to higher prices, because an uptrend is higher prices. So if we bought here and we're starting to see a nice uptrend and a triangle forms, that's a nice pattern to kind of stick in there and let it break through that resistance level, and we'll be seeing that. So, because think about, again, as chart patterns go with triangles, they are continuation patterns, and that's why you'll follow whatever the way that original trend is, either upwards or downwards, because it is a continuation pattern as opposed to a reversal pattern, which would go the opposite way. But these are continuation patterns, as you'll see in here. Look at, let's say, not at the very beginning, but kind of start at the middle. Do you kind of see, if you look at the highs and the lows, if you were to draw lines connecting those high highs and those low lows, does it look like it's headed in a certain direction? Does it look like a triangle is forming? And it's not like, I believe the word is isosceles triangle, all the sides are equal. It'd be more of, I believe, equilateral triangle. Boy, it's been a long time since I talked about that. But the idea is that a triangle is forming here. And do you see it? Well, let's put in those resistance and support lines here. And now hopefully you can see, the triangle as it's forming here. And you can see that higher highs were not made, but the uptrend's going to continue on this. So, and the prices don't reflect new lows either. They're trading within that resistance and support line, those lines up there. And you can see how they're converging together. They're getting closer together. So if we start at the far left of the triangle where that dotted line is, and then you can see how the prices went up to that resistance line, but didn't keep going. The uptrend didn't keep going. It turned around and went back downwards. So now it's going downwards, and then it hit that support line, but it didn't break through there either. It then turned around and went back up. And there's always ups and downs as you go throughout, but it then marched back up to that resistance line, and so on with multiple touches. And you can see how the trading range narrows. So that is what's called an ascending triangle. Ascending because it's an upward trend, and the triangles, the bottom line, that support line, is sloping upwards, where the resistance line is more horizontal there. So that's an ascending triangle, which is a continuation idea. And so when do you buy on this? So you're buying when it's getting to that low, it's getting close to that support line, right? So you want to let the trend develop. You want to let the triangle develop. That's the key thing with patterns. You don't want to say, oh, I first saw it, hit that first touch of that line, I'm buying then. We don't know yet whether that's going to kind of reverse around. So typically you want to buy in like the second or third touch of a support line. And the more touches a support line has, the more approaches or close or near touches it has, the stronger the indicator is that that trend is holding, that those price levels are holding and then becoming more predictable. In this case, you can see where we started to the far left, kind of where the dots are, and we got 1, 2, and we look at the third one where it's approached, and once it makes that turn away from that at the third one, that's when we buy in, right? So that's a very strong confirmation. You can also use a second indicator to further confirm, with volume or a moving average or some other type of indicator to help you confirm as well. You don't have to trade just off the triangle. You could buy on that second touch, by the way, and that's perfectly fine. The third touch just gives you a little bit more confirmation. The more touches, the more confirmation. And the idea is we bought there on that third touch. It went up a little bit, actually then came back down and then touched again for a fourth time, then went back up again. But you can see with that support line there, we've established the support line. The third touch helps support that support line, and then it actually reinforced with the fourth touch there, and then the prices went up, and you can see our profit between where we bought. And then if we wanted to sell at the top of that resistance line, we could, or if we wanted for it to turn back around again, we could hope for another touch of that support line. But if you see in this ascending triangle, you see how everything's getting narrower, the price range. So now it's getting a little bit more closer as far as will it turn around, or will it resist, or will it break through that resistance line, or if it goes back, will it break through that support line, because the triangle is converging, it's getting narrower. That's the whole idea of the pattern. And because it's a continuation pattern, we have a better chance of the breakout, of course, happening. And the whole idea is it's going to break out on the top end, because this is an ascending triangle. Prices before were rising, and then they got into this triangle pattern where they went up, they went down, they went up, they went down, and then started to converge. And as they got tight and converged, then somebody had to win, the bulls or the bears, somebody had to win. It had to break a resistance line or support line one time. And since triangles are considered continuation patterns, your breakout is going to be in the direction of whichever way the trend was, and the previous trend was an uptrend in this example, or an ascending triangle. It is always a breakout to the higher end, because you can see the support line has an upward slope to it. So that's where your breakout is. Now in a descending triangle, it's the same concept, just the other direction. You see how our support line now is horizontal, and our resistance line has a slope, and it has a downward slope, and a downward trend leading into it. Again, it's a continuation trend. So the lower lows are not made, but the downtrend will continue as it trades within that and it converges in there. But the prices are not making new highs either. The prices are starting to narrow and get closer down. So really, to tell whether it's an ascending or descending triangle, you'll look at which line is horizontal, basically straight across, and which one has a slope. Ascending, going higher, would have a resistance support line, that's uptrending, and a descending triangle would have a resistance line that's downtrending or downwards sloping. So if you own, let's say, if you own something, you might not buy or sell your holdings, depending where you're at within the triangle. If, let's say, I had bought earlier and it was downtrending, but I had bought earlier, and I had it where it starts coming back up within that triangle, I might try to sell near the resistance line, really to just get out is the idea. Because again, a trend is going to it's going to keep getting lower. Each time it bounces between that resistance and support line, the prices are going to keep getting lower until eventually they break through. And they break through, and they're going to break through in the direction of the trend. Though anything that happens, some kind of unusual event, things could happen, something that that would break the pattern that way. But if following the normal pattern, it's going to break out to the downside, because that's where the original trend was. And you can even see within the triangle how it's converging towards the downside. Prices get lower, and the range gets more narrow as we go down, so it'll break out to the downside. So when you see a triangle forming, the first thing to identify is it an ascending triangle, or is it a descending triangle? And then you can base your trades, you can watch that, let it form, and you can base your trades around it. Again, with either triangle type, you want to at least touch or get near that line that's approaching at least 2 times to help confirm that this is a real pattern that's in formation, that's in development. A third touch is even better, and the more touches you have, in general, the more formed the pattern is, though you might be missing out a little bit if you wait too long. So usually like a second, and certainly a third touch is a good recommended best practice when you're trading within many of these chart patterns, or almost all these chart patterns, but certainly with triangles.